Commercial real estate has faced a roller coaster this year. Take Walker & Dunlop. The company provides financing services to commercial real estate owners. The stock fell 70% in a few weeks as the pandemic began, only to roar back in the months since, sitting at a record high today. For more on the full real estate picture and a look ahead to next year's, let's bring in Willie Walker, Walker & Dunlop Chairman and CEO. And I think also you guys were ringing the bell today because it's 10 years since you IPO'd, so congratulations.
Thank you, Wolf. It's great to be here. A little different to be here with nobody else on the floor, but it's been a great decade to be listed on the New York Stock Exchange, so it's nice to come back.
Well, and of course, the fact that there's very few people around is key to the topic of discussion here. What is your outlook for commercial real estate prices? Let's start off in New York and Manhattan, clearly an area that's sort of in the eye of the storm of all the changing dynamics in the marketplace this year.
Yeah, well, all you have to do, Wolf, is walk around New York as I have today and see that, the city really isn't alive. But the bottom line is that most of the buildings in New York City have long-term leases below them, particularly in the office market. And so while the occupancies are down at 10 and 15% in office buildings, those buildings have long-term leases from big corporations. And as a result, the actual assets and the rent payments are still coming through. And so office is held in pretty well. As you well know, hospitality has suffered greatly because people are not traveling to hotels across the country. Retail is probably the second most effective commercial real estate asset class as people have stopped going to retail to buy and everyone's gone online. The two asset classes that we focus a lot on are industrial and multifamily. And because industrial is moving so many products and goods for Amazon and other online retailers, and then on multifamily, people still need to live somewhere, those two commercial real estate asset classes, Wolf, have done quite well.
To your point, though, regardless of which subsector it is, the fact that prices haven't fallen that much yet because long leases, big companies behind them, presumably the marginal price is set by the next deal. Does that not suggest that there could be a lot of air pockets to fall into in the years ahead or the months ahead?
It's a tough question to answer right now, given where we are with the vaccines being rolled out across the country today. I think people who have problems in their assets are still going to feed them for at least the next quarter or two, Wilfred. And as a result of that, I don't think you have a lot of distress. But it really does, the question you asked in the last segment about what happens if we are delayed in the rolling out of the vaccine, I do think particularly in hospitality and retail, there are many owners who are very much looking forward to having things get back to normal. Clearly in industrial and multifamily, you've actually seen cap rates fall, which means values have gone up because those are cash flowing commercial assets and owners want to own them more than almost ever.
You said that people need a place to live, which is clearly true. I wanted to ask about that part of your business, William, what you're seeing as far as evictions, as these moratoriums on evictions start to end, and we're facing critical deadlines, and we still have a very high rate of unemployment.
Yes, Sarah, as you know, the relief bill that is being contemplated on Capitol Hill today has in it an extension of the eviction moratorium and then $25 billion earmarked towards rental assistance. And so we'll see if that bill gets passed. But the bottom line is that most landlords across the country, Sarah, are working with their tenants to make sure that not only they have a place to live, but if they can't pay their rent, that they can get forbearance on the payment of that rent and then pay back the landlord once they get back to work.
What are the most powerful factors behind the trends that you're seeing in terms of where people are moving from and to? Is it as simple as urban to rural, or is it more complicated based on factors like weather and taxes and quality of life, things like that?
Well, you certainly have a movement from urban to suburban that has taken place for the last 9 months. The problem is that there is no new supply of single-family housing in America, which means that the existing inventory prices have been pushed up dramatically, which means that someone who was renting in a major urban center who wants to buy an entry-level single-family home, that price point has moved up on them, and therefore they cannot buy that home. As it relates to cities that we're seeing people move to, Wilfred, really there's a big migration to lower tax states to kind of call it very directly. You see a number of corporate headquarters, which you've talked about previously, Oracle being the most recent move from California to Texas. And when those corporations move, the jobs are moving with them and people are moving with them. And so you are seeing particularly multifamily properties in low tax states such as Florida and Texas really doing very, very well. And then in higher tax states like New York and California, that's where you're seeing vacancy and that's where you're seeing some problems.
Shepard Smith here. Thanks for watching CNBC on YouTube.